Welcome to Trading Lounge and the Commodity Futures Report for Friday, January 21. We're starting with the US dollar index here, and just for the purpose of not really trading, we've got a position there, but short on the euro mainly. We're still looking for this. We can see that all this from wave 3 to 4 here is a corrective pattern, so we should be pushing up. This box here is the 50% retracement level, and you can see that it's held the market here, and now we'll chip away at that and push higher. So we're looking for wave 5 up here further up around the 98, or certainly at least above here, and as it develops we'll look at the structure to the upside. But the US dollar is going to be pushing to the upside while the euro keeps edging lower. So how that will affect the commodity prices, this higher US dollar, I don't think very much at all actually, but yeah, that relationship. So let's move in. So today we'll be looking at iron ore, gold, silver, oil, copper, nickel and gas. So let's make a start. We'll try to whip through pretty quickly. Iron ore is doing extremely well at the moment, and we've got an impulse wave off the low of 1, 2, 3, 4 and going into wave 5 here. So we're looking for 5 waves from wave 4 up to wave 5 in green, which is not there. Just imagine that it is there. And yeah, as I've always mentioned, this particular move over here, the first leg down, is actually a corrective pattern, making all of this a corrective. So I'm thinking that we'll be taking this high out through here, and we're seeing this in BHP and Rio and FMG that we are also long in as well, and me personally. So we'll just have a quick look at the tick chart here for the from wave 4 to wave 5 here for that. So let's just take a quick look at that. So we've got wave 1 and 2 here in green, and then 3 here and 4 here, and little ABC for wave 4, and then we're pushing up into wave 5 here. We've been talking about a nice wave 1 here, so then we've got 1 and 2 and going into 3rd, 4th, 5th, so up into the 800 area here for iron ore. Let's move along. So we've got gold, it's pushed up. So yeah, I mean, we can see that the 18 here is, as a price point, is significant, and we can see that the market's sitting on there nicely, and it looks like a sort of bullish run, but we just wanted to wait for another high to come in. And yeah, we still don't have you know, wave this ABC here for wave E. We still don't have that just in yet, so let's just go in and take a closer look at this. I mean, silver's looking good, copper's looking good, you know, they're all looking a little bit bullish, but I just think we need to be a little bit careful. So what we wanted to do was just wait for 5 waves to move up through this point here, and then we'll see if we get from wave B down to wave C here. If I can just bring that in here, down for wave C of E of 4 there, so a 5-wave structure we're looking for here. Yeah, so look, I think that any new high above this here, because we counted from wave B here to wave C here, I mean, you have to sort of understand that this particular move up through here, unless we put like wave B here and sort of wave C here, where it's just not going to fit. I can't see how it's fit, and because we don't really have a nice impulse wave up here, you know, we can't go wave 1, 2, 3, 4, 5 because there's too much of an overlap there. So I just can't, if you know, yeah, I just can't. This is, you know, a corrective pattern here, so just, you know, we just got to be careful. We just don't want to get sort of sucked in. So anyway, what we can do is we wanted to wait for 5 waves up here, and we'll have a look on the tick chart to investigate those further. So let's just imagine for a moment the next important number here in terms of the trading levels is the midpoint, the 1850 here. If we get a trade set up on that here, which would be looking like this, we need to have a bit of the arrival, the reaction, the first high above the level, the ABC pattern there. And for those that don't know it, it looks like this. So if that's the 1850 here, we'll have the arrival, the reaction, the first high above the level, the ABC correction, and then getting support over here. So we can go long above here and here. Inside this little pattern here will be this larger pattern here as a fractal. So the arrival, the reaction, the first high above the level, the ABC, and then we can refine it further with an entry here. If we get that at the 1850, then we can look to go long at that point. Let's just go to the tick chart 100. What do we need here? Is 20 enough? Okay, so from wave B here, we've been looking up as 1 and 2, then 1, 2, 3, 4, 5, the third wave, all the way across for a big wave 4, which is a bit of out of whack really for the simple wave 2, a bit extreme, but we just sort of held in there with it. And then we've got 1 here, a little bit dodgy in here, but I started this little structure here as 1 and 2 from that point. I do wonder if we need to start it from here as 1 and 2 here, but we don't really have that low, it looks more lower here, so I think we're on the right track. And as 1, 2, 3, 4, 5 for 1 and 2 in here, then 1, 2, 3, 4 and 5 for third, fourth, fifth, third, fourth and fifth here. So yeah, we should be heading lower at this point, you know, but if we do get that support on the 50 here, which, because as you can see silver pushing higher, so if we get that, then we can go from that point there. But let's just wait for that to come in. That will be our sort of, you know, we've got to go long at some point. You know, we are seeing things like I was just looking at Barrick Gold actually just here, just on the weekly chart. I won't do the count, but we could look at this is a monthly chart, 1 and 2 and 1 and 2 here. So the monthly chart is really sort of clicking in here with a nice movement here. If you're interested in this, you can see it's at the 1990 there. So that would be a major trading level there, wouldn't it, at 20. So we would look for, if you're going to trade this long, then we'd want a classic trading levels pattern sitting on that. So that would be there. So I'm into Newcrest Mining because it's in Australia. So that would be on the $25 level, and it has traded above the $25 level, but we'd still need a classic trading levels pattern on there. Is that support on 20? No. Anyway, you need to go into the intraday and daily to have a look at that. We'll probably do that if we get a nice setup there. We can take a look at that in due course. So cruise on from this. So yeah, so let's just see how this plays out here. So moving along to silver. So with silver here, we've called the low in through here, and we've got an impulse wave up here. It's 5 waves, so after a corrective wave as an A and a B and a C, we're looking for another 5 up. It's really scooted along, so we can look at it as 1 and 2 and 3 and 4 and 5 here. Once again, we would want we want this 5 waves to finish here, because it can be an A wave, a B wave and a C wave here. 5 waves for the C wave, but then after that we can go long, but that would give us at that point, that would give us wave 1 and 2 here, and 3 here, and 4 here, and then 5 here for that first high above the level, and then the ABC pattern here, and then a push up from that point. So then we can put in this wave 1 here. So we're not quite there yet. I mean, obviously silver stocks, if you don't have any leverage, it's okay, but the risk is that this could be an A wave, B wave and C wave and fail here and move down. That's the risk. Okay, you know you've been told. So we don't know that yet, but anyway, let's go to the intraday, and we've been counting this up all week, so let's just continue with that little pattern. So let's go into, what do we need here? We need, is 5 enough? Let's get in a bit more. 10 enough? It doesn't really matter. So anyway, we've got wave 1 here and ABC for wave 2. So that's or the A wave, the B wave. And then we looked at this as wave 1 here and 2 here. And then we've counted this up here as 1, 2, 3, 4, 5 for 1 and 2, and then 1 and 2 and 3 and 4, 5. We've got 4 here, and then we've gone up. Last time we spoke, we're looking for this top. So we're looking for wave 4 to pull back. That can pull back to the wave 4 of 1 lesser degree, or the 38.2% retracement level of the length of wave 3 here for that. So anywhere in this space, and it doesn't even really have to do that, but somewhere in there. Funny, because normally wave 3 would be sitting at the top there, so maybe I've got that wrong. Normally would see that sit there, but anyway, we're not finished. In the main point here is that we'll get this wave 5 in, we need that wave 3, we need that wave 4, and then we need that wave 5 here, and then that becomes the top of wave 1 at that point. That's the risk at that point. So once we've got wave 5 here, then we'll have the ABC pattern here, and then that will be the catalyst and the trigger to the upside at that point. Anyway, we want $25 as the support. Alrighty, moving along. So crude oil, we're looking from, well, a couple of ways we could look at this, but wave 4 here, so 1 and 2 and 3 and 4 here and 5 here. So we could also look, I'm sure that that's just started now. We'll check that on the tick chart. So yeah, quite a long way back. It could pull back into the number 8 here for that, but let's just go on to the tick chart and have a look at that structure that we've been counting to the upside there. So how much do we need here? Okay, we've got wave 1 and 2 here as a reference point, and then from wave 2 we're going up to wave 3 here. We need 5 waves in blue. So I've counted this conservatively. I could expand it up. But when I say conservatively, I've just counted every wave at face value rather than giving it an extension within any particular structures. So, but even so, from 2 here as 1 in blue, 2 in blue, and then we got 3, 4, and 5 in here. A little bit small on the upside, but anyway, we've counted all the way through here, we've counted all the way up here. Everything's going according to plan. Last time we spoke, we were looking for this top to come in play here for that. So that's all there, and we've got A wave, B wave here, and C wave coming into here. So we probably won't pull back as far as the 8 here, but we do need to look at this. So that would be 1, 2, 3, 4, 5. So that's 1 and 2 there. So can we use any of these? Yeah, probably this. 1 and 2 and 3, 4, 5. Obviously it's sort of moving down with stock, you know. It's kind of, nobody's going to use oil if the economy's not strong and all that sort of stuff. 1, 2, 3, 4, 5. So we're probably 1, 2, 3, 4, 5. I'm not sure about that. We're here somewhere. Anyway, I'm not going to worry about it too much. I've got too much to do, but we're still looking for this to finish off down here for that structure. Okay, so that's where we are for crude. And copper. Okay, so with copper here, we've been working this big sideways pattern, which is corrective, and we will see the market go up. And I just don't know if I've got all this right here. There's a few things going on here. So wave 3 here, we've got the A wave, the B wave, the C wave, and the D wave, and I'm looking for the E wave here. So like gold that popped way up, this has popped up there, so we could put that up there. So what I'm trying to do here, I could scrunch this up and have wave 4 sitting here as such, and we're finished and we can just continue to go to the upside. We may have to do that. That would just simply mean that this wave C is here as an ABC, and then the D wave would be here, and there would be an ABC here for the E wave here, and we're done here, and we need to count 5 waves up here. I don't know if I can do that just. It would be sort of forcing it a little bit, and maybe we need to, do that. But I just don't want to do it just yet without enough evidence, because when you're looking at proportions and ratios and the right feel and look and all the rest of it, you can see how big this A wave was here. Then the B wave was a bit smaller, and the C wave will probably be a bit bigger than that really, but a triangle should be diminishing, so that means that the D wave can be smaller and the E wave can be smaller as well. It's not a perfect world, but that's generally what we're sort of looking at. And the triangle works into a balance point, and the balance of this market is 44. So let's just cruise into the tick chart. I've been there for a while. 100 ticks, and need what about 100,000? So that big grey line through here at 44 roughly is the balance line for that correction. And what I'm seeing here now on the balance line here, we've seen the market swing high, swing low, swing higher low, and then lower high here. So it's kind of forcing its way into that, say 44 for the sake of it all. And now we can see, it was resistance here, and now it's sort of like tried to gain a bit of support here, failed, shot up, and it's come back and tested it. So normally when it comes back and tests it and it takes out the previous high, that means that it's been retested and we're going up at that point. So I can also count this up here as 1 and 2 here and 3 here, a bit dodgy, and wave 4 here and wave 5 here for this. But this here looks like an impulse wave here. So, but I could squeeze that in there as that structure, you know. So we've got to kind of be a bit careful. And I just see this sitting on here quite nicely. But to confirm it, we really need to take out that high, and we haven't taken out that sort of high here just yet. We certainly could. But like gold, because you know we're expecting gold to turn down, and I could be totally wrong, you know. But I've got to play it out to the end. But yeah, so we could come down here as an A and a B and a C wave here, and then move off. Oh well, sorry, not an ABC. Beg your pardon. Let me just correct myself. We've already got the A wave. We could look at that as the B wave, and that could be totally wrong. And then we're be looking for 5 waves down here. Something like that. And then if we find support over here, then I'm very happy. Then I'm very happy to go long at that point. You know, we don't always get this shit right, but you know, we just got to kind of do our best and be a bit philosophical about it. So that would be it there at that point. But if it takes off up here, makes a new high above here, well then we really need to look at copper moving higher. Let's just have a look at that that ETF that we'd been looking at. Where is it? Can't find. Is it further down? Going a bit bonkers, been on the screen too long, I can't see it. It doesn't really matter too much. I'll find it next time. Yeah, anyway, that's the story, and I'm sticking to it. And let's just see. But yeah, I can see why everybody would be saying it's bullish, Pete. You're wrong. You got to go with it, and all the rest of it. But I just got to wait till the last bit, man. You know. So we'll just chill. I'm just going to chill on that. So, nickel's had another good week, and the 25 is going to be a bit of a glass ceiling here for that. We've been counting 5 waves up there, so we'll go in and have a bit of a look at that. We should end up with a bit of a classic trading levels pattern on here, and be pushing up higher. So you know, this will end up doubling up into 40 there or whatever. Anyway, one step at a time. But yeah, so that's 1 week. We're just going to go to the tick chart and pick it up on wave 2 here, alrighty. It's a tick chart. That's okay. So we want this one over here. We want 30 enough. Yeah, plenty. Whoa, overkill. 10, 5. So we've got wave 1 here and 2 here, and wave 3 looks a bit shorter, but it's actually okay compared to the length. It's just that this was like sort of elongated out to that point there. We've been talking about scaling in and yada yada yada. I haven't really moved the stop, so we could do that. I'm just going to keep it under here for a bit. Let's just see what we got here. So we've got wave 1, 2, 1, 2, 3, 4, 5 for the third wave, ABC for the fourth wave, 1 and 2 here, and then yesterday and stuff we're talking about going up here. We had 1 and 2 and 3 and 4. Well, I have to put that in there. I mean, it doesn't look quite right there, and I'll need to understand that a bit better. It looks a bit odd to me, but so what have we got here? That looks impulsive at that point. We can, I didn't mean to delete that. We can put that there. Let's just check on, so roughly from there to there, 38.2% retracement level is already been breached. Just want to put that in there. So we shouldn't be coming down any further. So we'll just put wave 4 there, but it does look like an impulse wave there. I'll just have a closer look at that inside. Yeah, it looks impulsive to me, so that means we should get another move down. What does that look like? That looks correct. It was an A and a B wave, and then 1, 2, 3, 4, and 1, 2, 3, 4, 5. Does that take out the top? No. So we still could come down here further. But we don't want to get stopped out. What if I made a mistake anywhere? Let's just check. probably haven't resolved that properly. Could be 1 and 2 here, I guess. A series of 1s and 2s. It was just missing my 5th wave here of the 5th of wave 1, because once we got that, we can come back for wave 2. And I'm just hoping we're not into wave 2 at the moment and get stomped on. I mean, if you're trading an ETF in this, it won't matter too much. We'll look to add to this position above here with the classic trading levels pattern. We've got positions here. We'll just chill at this point on this. I still don't want to, I don't know, we don't want to get stopped out in this. It's too good. I mean, maybe I've got to squash this third wave into here somewhere. I just need to have a quick look in here. Yeah, maybe that's my mistake here. 1, 2, 3, 4, 5. Maybe that's got to go there. If that is so, it just seems a bit weird having it there. And just I know my levels, and it just doesn't seem right to put it there. I mean, that would all be there then. That's just in case you missed that. We're not going to get full pullback on all of this, which would bring us down to this level here. I just don't see that. I mean, I have to put it in to talk about it and just look at it and mull it over. This, what's the fingerprint of this market? 38 to 40%, 40 to 50%, so that's a bit better. So that brings us up into, I'll leave that there just so I know I've been there before. Then that brings us down to here. I mean, obviously that's all of that. There's that, all that buying and selling there. That's the that's the real support. You know, this doesn't matter too much. It is about that block. That block is the support. But anyway, that caters for that, so that's cool. Okay, anyway, I'm going to leave the stop out of the way here, and let's just see what we've got. I want to have a closer look at that just while I'm here. Sorry about that. I'm just going to go to the 5 tick and we'll just pull that apart for a second. Okay, here we are. So we can look at that as 1 and 2 here. That's 1 and 2 and 3 and 4 here, and 5 and 1. So that's we can look at that as 1 here and 2 here. We could put 2 over here, but how does that look? 1, 2, 3, 4, 5. And well, maybe it's 1 and 2 here. Maybe we can squeeze an A, B, C out of it, but then what have we got over here then that doesn't look too crash hot? Definitely profit taking going on here. Okay, I'll have to do some work on that. I'll look at that on the weekend, but we got time, so nothing can go wrong too much. Natural gas, we've been looking at it as, well, possibility as wave 5 sitting here, but otherwise wave 4, or we could put this wave 4 there. That could also play out as well. and wave 5 here and this here. Anyway, we'd still need to do, it's coming down, it's doing all the right things. If we've made a mistake, we're going to go along here on this. But I won't change that out just yet. I'll just leave this here. I'll just put that there and this down here first. Let's see if we get 1, 2, 3, 4, 5 coming down. We don't need all of that. So we can go long above there. We've talked about that yesterday. Still need to do that. This, let's just see, as 1 and 2 and 3 here. So wave 3, there's going to be support on those lows there, and 5 down here. That's all we need for that. And then an ABC for that, and then this, and then we can buy at that point. That's what I'm thinking. That would make sense to me. I can see how I could squash it all up, but it'll just make this wave 5 really small here, so it just doesn't sort of doesn't fit right with me. And besides, any move to the upside, and we'll be all over it, you know. Any impulse wave, we'll be buying the pullback. I mean, even in wave 4 here, we'll look at doing that. We may have to get out and get back in again, yeah, we'll just keep an eye on it all. Not quite landed yet. I mean, it's in a sort of a world of its own, the gas anyway, isn't it? And the same as iron ore's in sort of a world of its own. Copper and nickel are kind of together a little bit, but nickel's shot off. So they're all kind of doing their own thing. They've all got their own supply and demand based on economic activity that's going on in their own way. Alrighty, I'll leave it all of that. Nothing to do with nothing. There's nothing in gas. I don't want to short it. I want all this to finish, and then we'll look to move into it, and we'll play the trend. We don't need to lose money, you know, in very short-term trends in this, because I mean, look at the way it moves anyway. You know, it does that, then it does that. So, yeah. So we'll just chill. Alrighty. Thanks for tuning in, and enjoy the weekend. Cheers.